a lot of traders were frustrated. They started to question what they did or blame other people, blame the markets. And what they didn't do was ever sort of speak to each other and understand what each other's problems were.
A trader who organizes his ecosystem accordingly will just have much more of a powerful process to improve and scale his intelligence as he's scaling the team's intelligence.
Every conversation can yield something, and you then have a framework to actually put that something into, so you can then, you've always got that now.
The moment you know what's possible, your automatic bar start rising, and that's such a key competitive advantage. And this is the reason why any floor that we open, we need to have a strong performing trader.
That's the great thing about trading. No matter how well you do, it's not going to take away from what I can do. So if anything, it's going to help me because I want to get better. I want to be as good as you. I want to be as good as other traders.
My name's Alex Haywood. I'm co-founder of Axia. I'm here with Richard Bailey, our head of training and development. And we get a lot of questions about who is Axia, and what is it that we do. So I'm going to start this off, and it's going to be a session between myself and Richard. And we're going to be exploring all elements of the trading industry, all elements of what Axia is today and how we got there, and how we've evolved the space over the last 20 years in screen-based trading. So Axia started in 2016. It is now part of the Axia Trading Group. The Axia Trading Group consists of Axia Futures, the education arm, Axia Markets Pro Limited, which is the proprietary trading arm, and that houses approximately just over 100 plus professional traders. So Axia started in 2016, a week before Brexit, and was actually on the back of a group of us traders who lost our entire trading accounts at a previous firm. At that firm, it all fractured. A lot of the team fractured. They went to different trading groups. And at that time, I approached FCT group of companies. And it was a company that had been around since 1984. They had been clearing some of the biggest traders on the planet, especially in the euro-dollar options stir market. And we needed someone that we trusted. We needed someone that if we started to trade with, that we weren't going to have the same incident of what happened when we lost our entire trading accounts. And some of the original members of the Axia Futures trading team, or the Axia Markets Pro trading team, were traders who had 7-figure accounts. And those accounts disappeared and dropped overnight. So we had to start over, and we started over that week before Brexit, which is where everything literally changed. And it was opening strategies that we initiated after the UK left the European Union. And that really kickstarted the entire Axia journey. When we started Axia Futures, it wasn't long after that I approached Richard that I worked with before in the previous company that actually lost our traders' capital. And I approached Richard because I remember his exceptional ability to communicate a message and train individuals, but also his vast amount of knowledge of the markets, the futures market. And we wanted to bring in that knowledge into the company and really expand our talent pool so we can grow the industry in prop trading, especially in London and Europe. So Richard, you would go back and let's speak about that journey?
Yeah, absolutely. It was 2013 you came along, and so like you said, I was one of the traders in that group of traders on the floor, and we ended up talking as you naturally do, and this was where it then brought me into the side of helping people out, which initially started off as me being asked, can you help explain your approach to central banks, your approach to profile, which I always enjoyed, and personally I thought, well, this is a chance for me to become a better trader. I always feel if you can explain something to somebody, you must understand it very deeply. So personally, it was a little bit of a chance for me to improve myself to start with. But that started to bring in a different relationship to the whole firm, which I thought was something that we didn't have before. It brought in this whole conversational element about how can everybody improve by understanding what each other does. I really enjoyed that side of things, which then led me doing a bit more work with you and sort of bringing on some of the other grads. Then the incident happens, everyone goes their own way. So I went to a different rival trading firm. And so, it was 2017, beginning of 2017, I came over, which was a conversation we had. We reconnected about then bringing on more traders to Axia, because you need to keep on growing your traders. You need to grow new blood. That brings in new ideas. It brings in new perspectives. I know I speak to some of the elite guys and they're like, it's great to have new people, because without new people, you become stale. And it doesn't matter how much experience you've got without somebody else going, yeah, but what about this? You always learn. You always question them. Well, if that new person's come up with this, is that a good idea? How do I make this a trade? So you've got to keep growing a firm. And that was where then I felt that I could add that experience to help grow new traders, which ultimately supported something that I really enjoyed at the old firm, which brought me onto that area. So yeah, the relationship returns, and back we go to bringing new traders in. And that's taken from, what was it, 5 on Brexit night? Yeah. 5 is now 100. It's grown pretty rapidly over 5, 6, 7 years now. So yeah,
absolutely. And I suppose what I probably want to segue into, and I think a lot of people to understand almost the meta part of the industry, the evolution of the industry, and therefore people also understand how we are trying to evolve training, of how we are trying to develop traders, the conversations that you and I have of where we think the future is in training. And so probably the best way is to maybe look at how the industry has transformed over the years. Yeah. And possibly, if I were to kickstart it, I started, as you know, it was back in 2004, and it was the Greenspan era. It was, the back end of the .com, and rates were raising, and going to 2007, 8. And I arrived on a floor of 300 traders. And during that time, seeing those 300 traders, seeing traders do exceptionally well, trading global macro events, central bank events, those stage, the central bankers were moving the market exceptionally. Traders were highly skilled. The professionalism hadn't quite started. And then the financial crisis started happening. So all those traders who weren't able, and even before that, it was that transition from the pit into screen-based. There was the expiry of the pit traders who didn't have the skill of the screen-based. They came, the ones who were the gamers, the ones who could make sense of the numbers on the screen, were able to perform until the end of the financial crisis. Now, if I'm right, you started in the depths of the crisis?
Yeah, so I started 07, 08, 07 as a grad, 08 live. And probably the same as you. Your training experience is pretty limited. Here's some charts, go have a go and see if you can work it out. But I completely agree with what you're saying about the traders who left the pit. To me, leaving pit trading and going to a screen is a bit like the difference between playing poker at a table and playing online. At a table, it matters what the other person's doing, what you see them doing. Online, it's just about the sequence of their betting. There's a similar analogy to screen-based trading versus on-floor trading. But yeah, 08 I started and very much saw that side of the industry that is, understand your macro stuff. There was loads of volatility, you got opportunities, and that was where it did have that culture that you could kind of come in, do a bit of trading, go and have some fun. And because of the volatility and the news that was around at that time, a lot of people could do that, and the opportunities were there. And like you say, things then starts to drift. Once the volatility fell, 09 was still good. Once volatility starts to fall in 2012, 2013.
Because that was the key part, is we've now QE, the markets, all the interest rate markets are flat. What were you, and this is before you and I met, what were you starting to sense on the floor? What was happening amongst the traders? Because I saw all of a sudden a skill that had been cultivated on the screen from the early 2000s to 2012, 13, the end of the European debt crisis, the last kind of big major macro event, and then the volatility dry up, and the traders who were specialists in one market, all of a sudden things changed quite drastically.
Yeah, I remember that. And I think what I always recall is frustration, blame. People, it's all the algos, they're stealing all my edge, they beat me to this, they beat me to that, which essentially is not taking responsibility for yourself. But I definitely felt that. And I was one of the traders who was quite singular market, predominantly DAX, maybe a bit of oil. And 2012 was really the period where I've kind of realized I've got to learn something new here. I've got to understand things from a wider perspective, go from being very sort of niche, narrow focused on specific small strategies, specific
on the order flow price ladder.
Yeah. It was almost, you could learn little tricks, little things that would get you by, and that starts getting eaten up. So you then have to start to understand things from a bigger perspective. And for me, my approach to that was, right, I want to go and learn profile, because no one on our floor looked at profile. So I thought, well, how do I gain an edge? How do I do something different? And that was what really got me into profile. And I kind of really got absorbed in that. And that then gave a new way of approaching things, a new way of looking at stuff. But it was the adaptation. If you didn't adapt and you kept moaning and you kept doing the same stuff, they were the people that you started to see drifting away. And suddenly you're, oh yeah, he's left. He couldn't make, he's done his complaint and he's gone. And that was, you probably saw the same. That was a lot of what happened during that period. And then you got the new guys come in who naturally had to look at things differently, because they hadn't got the experience of seeing all the macro events and all the wild volatility. So that wasn't normal to them. In a way, I think there was a hangover for some traders that they loved the days of the volatility and everything it brought along with it. And they didn't have that anymore and they couldn't cope with it. Whereas new traders, this is why you bring in new traders. They didn't see that. They didn't have that hangover. And so they then had to learn and trade what they could see at the time, which was lower volatility. It was less little tricks and more understanding bigger perspectives, understanding a more sort of technical context rather than just simply a few things that could get you by. That was definitely my feeling of a lot of traders were frustrated. They started to question what they did or blame other people, blame the markets. And what they didn't do was ever sort of speak to each other and understand what each other's problems were and how perhaps one person can help another, which I think was where the old firm grew, particularly from 2013, of that approach of going, well, what do you know about this? What do you know about this? How can you improve you? How can you improve you? And that was something that I thought did massively help, that kind of collaboration where people didn't before.
Yeah, and I suppose, just speaking about, if we look again at what you mentioned, that key critical juncture, which from the pit, the big skill upheaval that needed to happen to translate and become a speculator screen-based. And then there was the year 2000 to 2012, 13. You could be a one market magician, specialize and make an incredible living. And then the 2013 happened, and all of a sudden the new kids on the block were showing the ones who were able to really professionalize the game, where the journal taking, the working on weekends, the reflecting, the debriefing. So all of a sudden, these professionalizing the game, understanding your energetic state. So we saw that 2013 to perhaps 2017, the traders that survived that through professionalizing, that's what I saw. These, where there was Evernote, those days was, all these digital journals so they can recall patterns. And then we fast forward to 2016. The start of the Axia Futures team, you and I connecting in 2017, and noticing, to grow the traders even quicker and more efficiently is the sharing of almost performance, collaboration, and so what also makes you so unique in our 6-week career program is you're also the coach, the mentor from elite, senior to junior traders. But also you have the risk screen, and you're watching and observing and interacting with over 100 traders, whether it's short-term interest rate traders, whether it's a whole collection. And that view, I wanted to ask you that view. How do you feel that's helped with you developing the training programs? The delivery of the 6-week career program which you lead, as well as our 12-month blueprint coaching program. How do you feel that has changed for you to deliver on the training side and constantly evolve the training? Yeah,
for me, a lot of what goes into the training is not, and I think it's really important that it's not my way of doing things. Yeah, these are things that I have picked up from other people when other people explain their perspective on how they would approach a certain market, a certain situation. What this gives then is a new person, a new trader coming in, it gives them different avenues to go down. So they get a vast amount of knowledge, which has come from wide experience across all, like you say, all asset classes, from the very short end interest rates through commodities, currencies, all of the rest of the asset classes. And so what this then allows people to see is the options they have. Too many people get too narrow focused again into one market. Everybody must trade the S&P, for example. But if you can see the kind of difference between different markets, you start to find out from yourself how your personality suits those markets. So I see some people who say, I just can't trade this market, but I really get this market. And being able to see different perspectives and different approaches means that as a new trader, you can come in and kind of find your own way that aligns with perhaps a more macro-based trader, a more scalping-orientated trader. So you get this sense of what it takes to be different types of trader, rather than a kind of very prescriptive, narrow path of this is what it is to be a trader, which it isn't. Every trader is different, and the edge is the way you express your personality onto how you trade. And that's
and what you said there, that kind of everyone has this uniqueness that you meant, and this and sometimes when you are at the mercy of one person's view or system of the market that might not resonate with your personality, or as opposed to when you have a portfolio, almost, I call it exposure therapy, when you have a portfolio access to a group. For instance, today, a whole bunch of traders made a lot of money on the short-term Fed funds rate. And now what's going to happen is a lot of guys who had no idea about the opportunity in that market, was guys who were trading the longer-dated bonds, trading the equity indices, will now, that knowledge will be passed through the floor. They'll acquire that skill set. But not only does that knowledge get passed through the floor, you observe the risk, you observe what happened on an oil trade last week, what happened with the Fed's Powell yesterday. You then translate that performance, that training, those skill sets directly into the training program.
Yeah, because it becomes a new element to it. I'll go and explore some of these things. I'll speak to some of the traders about why they're doing certain interest rate products, which then comes something that becomes a bigger part of the course, or a new element to it, a new way of looking at it. But like you say, I've sat next to people who, like I said, they're an amazing trader. They've been really successful. I've sat next to people who have explained exactly what they do. And you can't replicate it. No matter how much experience I've got, I can't replicate precisely what any trader does, because it's their trade. I can learn from it, I can pick up skills, and then make that my way of doing things. And that's what any new trader's got to be able to do. Even if, take the short-term interest rate example, even if you never trade those products, having a deeper understanding of why people do and what that means for trades that people take is, again, it's that depth of understanding of what trading is, rather than the high level strategy. It's that depth of how markets interconnect and how traders sort of essentially interconnect in the way they trade. And that I think always feeds through, and it always brings in a new, constantly changing dynamic into any kind of training that we do. That you're also getting the most up-to-date things. That's the benefit of having interactive sessions where you go and say, right, what happened today? So now you can see the training coming through in reality. It's very easy to give people examples and say, this is what happens in a perfect example. You have to explain how something works. But then you've got to bring the reality of, okay, so here's an example. Why does it work? What is it about this one that worked today? And why didn't it work yesterday? And being able to convey that with the perspective of being able to say, and these traders did it this way, this is what market certain traders are looking at, really brings to life any kind of training. You get to see what people actually do rather than the beautiful theory of what it should perfectly look like. So for me, that's where you give the greatest benefit in terms of training anybody, is that ability to bring in the reality of what it is that people really have done in these situations, which I think gives people a lot of confidence when they've taken a trade that they know some of the elite traders are taking, but also gives them a sense that people are not infallible. And part of the game is being able to lose and then understand and learn from your losses to move forward. Otherwise, you can lose that for yourself, that feeling of what it's really like to be a trader.
And I think that is effectively that transition, when it was professionalized 2013 to run, when Axia started 2017, the guys taking that to, keep on iterating that process, and then the age of strategic collaboration, because that's also, they call it that extended mind, the ability to leverage off each other. And that strategic collaboration now is probably going to iterate on itself even further, which then translates into our training, into our materials, is traders within a team, whether it's on the floor here in our London building. We're sitting here on our first training floor out of the 3 that we have. But the ability for traders to connect and create their ecosystem of collaboration of who's best in class in certain domains, sharing and transacting that information, and how we can replicate that, which we're building on our 12-month coaching program, that those digital teams, that they can also interact and collaborate with each other of what they are doing in the best way. And the trader who organizes his ecosystem accordingly will just have much more of a powerful process to improve and scale his intelligence as he's scaling the team's intelligence.
Yeah, and what you were just saying is the kind of advancement of what did happen. It was a social interaction. You chatted with people about what happened today, your experience.
Even at the pub.
Yeah, and that was, there was a correlation between people who went to the pub and people who made it back in the day. And that wasn't because people like going to the pub. It was to do with that social interaction that you say, oh, what did you do in this situation? What did you trade there? But there was never a structure to that. You might pick something up, but it was very ineffective, basically. You'd have a load of chats about different things, and you might pick up one thing from 20 different conversations, whereas making it more structured, making it more of a group collaboration with a purpose.
Purposeful, yeah.
Then it becomes so much more efficient. Every conversation can yield something, and you then have a framework to actually put that something into. So you've always got that now. Maybe you don't use it today, tomorrow, but 6 months down the line, you have not just a recollection of that conversation, but also something that you've then put into your note taking, into the way that your methodology works to learn stuff. So it's making stuff we all did much more efficient, giving it structure, giving it a purpose, giving it a professionalism, rather than just conversations.
And structured, fragmented social organization.
Yeah.
As opposed to a structured, purposeful, as you mentioned, social structure of collaboration.
Yeah. Yeah, because you can have a social interaction. Unless you go over what you talked about and sort of try and take something from that, you don't really learn anything. It's a conversation that floats off with other conversations and you never take anything from it. But when you actually sort of go, okay, well, let's reflect on what we've just discussed and perhaps write it down, or almost create a new idea around that, then suddenly I understand better what you do. You understand better what I do. Both of us are better now at what we both do. I think that's a really powerful thing that I don't think any other firms really do. A lot of other firms without it being disparaging, often rest on their laurels and just expect that the same old people will continue improving. And if they don't, then where do you go? What do you do?
We saw the rapid shrinking of the industry.
Yeah.
So one of the other questions that we get asked is, the timeline of Axia, and I just wanted to, fill in any blanks that I've left out. So 2016 started the week before Brexit. 5 traders in London, 2 in Poland. The team starts off, and then over the next year, the team. A year later, we moved from a little WeWork
tiny
operation, tiny little room. I mean, 3 meters by 2 meters. Half our legs were outside the room, but we were starting, and the team was starting, and we were collaborating, and we had to survive, and we had to make money. And the team then, grew over those period of 6 months. We went to a bigger shared WeWork environment. We had a couple of more experienced traders join us, and that's then when you joined us to start the training in another separate room. But we had probably 8 traders at that stage.
So we put 8 that grew maybe to 12 in that period that we were there, and then like you said, we had the training facilities. So I came when we were at the WeWork, and developed the coaching program for new traders. That 6-week course that we still have that is now into various.
That started in WeWork, right? Yeah.
The concept and the structure of it was there, and then the actual ability to take people in and educate people and bring them into trading was when we then moved, and we had that next to the trading floor. So they really got the on the trading floor experience. I think, like you said, it's quite key that you've got 3 of the best in the business in each office. You've got a senior elite trader in every office who is essentially, in my view, the kind of benchmark. That's the level you need to be getting to or should be aiming towards. And having somebody who, one, has those skills and are clearly visible, but 2 is an aspiration. That's your goal. That is the level that you can reach. And a lot of firms don't have the ability to say that this is what you can get to. This is the level that you want to be trying to achieve.
You really can't underestimate that, because we've had some traders join us over the years from other firms, hearing about the performance of our internal traders, and then all of a sudden knowing what is possible, that that these traders are putting in these numbers and these performance. It's just like that Jackie Bannett, breaking the 4-minute mile. The moment you know what's possible, your automatic bar start rising, and that's such a key competitive advantage. And this is the reason why any floor that we open, we need to have a strong performing trader.
Yeah, absolutely. And like you say, that then also keeps everyone on the up, because if you are that trader, someone's coming up, someone's trying to catch you. You've got to improve your game to stay ahead. And I know that 2 of the traders who are running those offices had that element very, very early on in their career, where it was a case of one of them traded a 5 lot and the other one thought, well, I'm going to do more than that next time. And it escalates. And that's at the very early stages. Now it may be multiples of those numbers, hundreds times those numbers. But that's that competitive element that keeps the top people going on, but also keeps the ladder going of what you can try and achieve. And you're constantly trying to keep pace and improve your own game as a way to make sure that you're keeping up with certain people or keeping yourself at the top of the tree, if you will. And that benefits everybody. That's the great thing about trading. No matter how well you do, it's not going to take away from what I can do. So if anything, it's going to help me, because I want to get better. I want to be as good as you. I want to be as good as other traders. And that's something you don't get in other industries. Most other industries, if you win, I lose, or you get promoted, therefore I can't get promoted. And you don't have that in trading. It's limitless. And just because someone else does well, you can do the same. You can match them, you can beat them. You can become the benchmark.
I wanted to now touch upon another question that people ask, and I'll probably take it from the 6-week career program, which you're the main driver. This is where we find our talent that join the desk, whether it's London, Poland, or now Cyprus. We also have a satellite team in the Czech Republic. There are traders who have come off our career program, our 6-week program, is how do we go about growing, developing traders? How do we go pushing them? In the last few years now, traders who we invested in 3 years ago are starting to break through now, having their first 4-figure day, 5-figure day, or first 6-figure month. And that journey is, and I want to speak about that. It was something that people underestimate. I had an interview with one of our elite traders yesterday, one of our senior traders, and that question of how long does it take, and what's the important ingredients to survive? And at Axia we have a methodology, a model that starts on the 6-week career program, but that senior trader said yesterday, the most important thing first is support, family support. Understanding that the job is tough in the beginning, that you're acquiring a skill, you're acquiring a craft, you're developing yourself. But over and above that support, because this game is tough anyway, is having the financial support for a period of approximately 2 years.
Yeah.
Because those 2 years, and if I were at the end of the career program, I actually show after you've delivered the great, we go through equity curves of what some of our senior traders' equity curves look like now, but actually what they look like in the first 2 years. And they don't look very ripe and attractive. They look like, wow, why hasn't this guy given up? But then when you see the exponential return at the end, you can see that he was actually cultivating and developing his asset. So answering that question that people ask is, how do we go about growing and pushing our traders? You being the father of many of our junior traders who have now, conquered and becoming better traders, profitable traders. Explain that journey for an Axia trader, which we now provide remote opportunities to as well. So that's an area that we're exploring. We feel the brick and mortar environment, there's a lot out there, there's a lot of talent out there, and that's what we'll be harnessing now in the future. But just for those out there, how do you see the development of an Axia trader?
So for me, I see it as you leave the 6-week course, and where you're going there to start with, early on, it's about then really understanding the trader that you are becoming, not the trader you want to become necessarily, because I think people sometimes have the wrong view of what they want to become, but starting to understand what the trader is that you are becoming. What is your style? How do you go about doing things? And this is a conversation that we will have with newer traders, and it's about then trying to guide them through that stage, and then to develop a sense of the trades that you start to take, to start to build in a more real being live type element into your trading. And that's possibly going to take 3 months, 6 months to start to get you to a point where you can say, right, this is what I'm going to do. When I am live, this is how I'm going to go about doing it. And again, that's still an element of, you need a coach, you need somebody there who can give you that little push to go, right, let's take the ideas you've got now, let's try and make this something that you can now start to take live. And that is also an element of making sure people have got the confidence, the belief. I think a really important bit, along with support, is you've got to believe it yourself, but belief's not enough. You've got to then have belief, but structure, kind of, right, I believe I can make it, I believe I can do this, and now I'm going to do certain things to ensure that I get there. Belief won't get you there alone. And so then sort of moving through this transition of, right, let's try and make this more real, put the pressure on a little bit. You have to put yourself under pressure. That's one of the hard bits of this job, that nobody really wants to be under pressure. No one wants to feel that. And you've got to optionally put yourself in that situation, because you don't have to. You could not take the pressure and just walk away. So you've got to put yourself under pressure so that then you've stress tested yourself. And you can then go live with confidence. That's the key thing, going live and believing you should be live. That, I think, is so important for any new trader. And that's what a coach is there to help you with, to sort of say, okay, you're doing this well, you need to be pushing this. And also you need to be addressing these things that are not really helping you out. Are you going to get rid of them completely? are you then going to look at this as a new potential opportunity, a new way of doing something? I think that's a real important part of people's journey. It's about taking what you know, the wisdom, if you will, of the career course, and then making this something that you can produce results with. And that's the difference between learning theory and action. I know you speak about one of the most sort of, I always think of him as like the benchmark for somebody who's got a very strong learning ethic, a very strong process and framework. And he often talks about the difference between, you can understand the stuff, you can have theory, but you've got to action that, and that's the bit that comes after the course. How do you turn your knowledge into some kind of action now that you can do enough to get yourself live, enough to get yourself going, and then you grow? Because it's those little things that once you're live, you start to pick up new ideas, new things, which don't pay you now. They might pay you in 6 months. And like you said, that's where the equity curve goes like this and then jumps. And it comes from that. And so, yeah, the important bit when people leave the 6 weeks is keeping that element of somebody being there to push you, to help you, to discuss what you're doing, and it being personal, it being specific to you. Because people grow in different ways. People adapt and learn in slightly different ways. And having somebody who can relate to that and who has seen it from their own experience and their experience of other traders with them, that you can relay that to people. I think that's really important.
Absolutely. So to summarize, what I'd like to do is just explore for people to really understand the Axia philosophy, the Axia methodology, on the back of how we've seen the industry evolve. You know, people asking about the philosophy, the learning approach. A lot of times when people ask me, I say we're also as much as a training education company, as much as a firm that tries to understand how we learn as humans, and understanding learning edge, why we talk about debriefs, reflection on weekends, how that programs into your cognition. But if we look more specifically at the tools that we train traders and a broad approach, I would say there is the technical part, which is the market profile for the idea generation, which you train throughout the 6-week program. We have sections on it during the 12-month blueprint coaching program. So the profile. Then, well, how to access those ideas through more of a granular look of the order flow, using either the footprint or the price ladder. Now, those are the core competencies from the tool. From the tool perspective. Then there is the purebred, which we still have, those order flow magicians that we train the skill sets on how to train purely on the DOM. But then we have a large component in the training. I think you're doing on week 4 of the training program, training central banks, geopolitical crises. We know when the volatility is up, our traders perform exceptionally well. Normally the algos are switched off and the discretionary traders are switched on. And because that is kind of the peak performance where, we speak about in one of our YouTube videos on the narrative edge, how humans think in story. So talking technical side, explain those are the 3 tools that we use predominantly on our floor. If you walk around all of these 3 floors, those are the tools that you see on all of the screens.
Combinations of them in different sort of areas there. Their screens, yeah, absolutely.
Exactly, and then just to, and over and all above that is how you integrate that into a learning system, and a learning, and to a learning approach, and then from there, once you've developed the foundation, which comes from the 6-week career program, is then how do you organize your collaboration and your learning system going forward? And that's why we have that 12-month coaching program where we exposing people to what's happening on the floor. We're exposing people to where edge is being happening on a week. We have those weekly report cards. We have those coaching sessions. So it starts with foundational training and then shifts to organizing your learning processes, your learning systems, how you learn the markets, how you go about debrief, how you learn from your lessons, and then organizing your collaborative network. Yeah. Is there anything that you feel I've left out there that you'd like to add?
I'd go along very much to that. I think, like you say, it is about giving yourself a base. Yeah, if you've got the tools, you've at least got a foundation. Then you layer on top of that. Yeah, the macro narrative understanding is not helpful unless you've got a base to be able to say, yes, but I understand the context of where markets are. This market's got the scope to move. And if you don't have that base technical understanding, you can't extract the most out of that macro understanding. And that's where some of the top macro traders in the office are very, very good technical traders, because they understand that. And it's having this base that you then build out and build out and build out, and you bring in new skills in constantly. Like you say, that's then what forms your process of your way of doing things, and then allows you to grow further on. You organize your structure of what you learn around what you next need. I always kind of point people towards a debrief is there to highlight what the next step is for you. It's not about just to say, oh, this was interesting today, I did this, I did this. It's about trying to identify, well, what's the next thing that you need to know? And how are you going to find that out? And that's the structure around how you grow. So it's about, for me, it's a base, and then it's adding bits on, and it's then having a methodology to understand what you need to add on. And that comes from that learning framework, that debriefing structure.
Absolutely. And if I were to speak about that journey of a trader and what that looks like in the future, and seeing the transformation from 2013 onwards, professionalization, then from professionalization to building strong learning systems to digest the market, metabolize what you digest, and then translate that and express that into effective trades over time, and then that collaborative environment. And that trader of the future, and it's one of the things that we're working on now is Axia, is not only be able to organize our collaborative technologies, but our technology stack to enable our traders to be able to learn more effectively from each other. Although we've been developing 6, 7, 8-figure traders within the company over the last 6 or 7 years, we also only know that we're only as good as how we're innovating into the future. Yeah. And anything from your side that you are working towards or view where us as an organization are looking to manifest better performance, and what you feel will be that better trader in the future, and what that trader of the future needs to look like?
Yeah, so I think one of the things, particularly regarding performance, is bringing in that aspect of being able to real time see how you're performing. So what that will enable you to do is say to yourself, right, today's a good day for me. And this is something that you can almost have as a program, or even part of a sort of digital evolution of tools that we use, to be able to say, right, this is a good day. Historically, these are the types of day that you do well. And that then gives you that ability and that confidence to say, right, today I can push it a little bit more, because I understand that these are the conditions that I perform well in.
You've got the data, right?
Yeah.
You're receiving the data.
It's matching your performance to the previous conditions, which then kind of almost alerts you, rather than like a trade alert that says, oh, you might want to be buying it here. It's an alert that kind of says, today, all of these things stack up to where historically you perform well. So this kind of tells you, today's the day for you. Take some more risk. Push the boundaries a bit, because that's what differentiates an average trader or somebody who's a non-pro trader and professional traders. Professionals are able to say, right, today has got characteristics that for me, I know I'm going to perform. And they can then push themselves on those days. It's kind of seeing the opportunity and grabbing it. And now if you can bring in technological improvements that can then say, historically, these are the days that work for you, it just enhances that ability. And it will, for some people, highlight areas that they didn't realize they did really well on. And that's always going to be a benefit to you, to be able to say, well, I know that I should be pushing myself there, or some days I should be holding back, whether that's after a sequence of certain performances, whether that's a certain type of day type. It may well be, it's those kind of things that can give you that ability to know when the time is right for you, which is such a hard thing in trading to understand when the time is right.
And I think just to close off on that is when people try and outsource everything to AI, machine learning, because it sounds sexy, it sounds advanced. And what you're speaking about here is the leveraging of human technology, I'm talking about internal technology, understanding our discretionary, because the cognitive sciences are still trying, discovering many things of how we think and how we articulate even performance. So when you're leveraging the actual machine learning, the AI, that technology, and interfacing your human discretionary side, whether you want to call it a cyborg trader or however you'd like to describe it, is when you, and I think that's so important, is what you've just said there, Richard, is the ability to take a specific environmental conditions that you can receive that alert that comes from machine learning, AI, that then activates the discretionary edge that you have, where it is more artistic, more intuitive, and can actually operate in a more deeper layer of nuance than a machine that needs much more data, and those little environmental triggers that trigger you into action on a more consistent basis.
It's about it's there to support you, not to take your place or outsource what you do. No one's going to be able to do what you do and think how you think, but things can support that and improve the way you do things.